Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. And I've put together the top 7 key market drivers I look at when analyzing a real estate market. Go to sethferguson.org to download your free copy. Our guest today owns several senior living communities and also raises funds for other operators in the space. He's also the author of the book, Investing in Senior Living. Doug Fullaway is the president of 14 Plus. Doug, welcome to Purchase to Profits. It's great to have you on the show.
Thank you very much for the opportunity.
Yeah, we're really looking forward to this. So let's dive right in and talk about your real estate goals right now.
My goals are very, very simple. My job in life is to help great senior living operators find the equity they need to grow their business. And in the process of doing that, I expect to earn a finder's fee and to participate in the promote in some small way. I'm at a stage in my life where I don't necessarily need to make a ton more money, but I need to do something that really gives back. There are many, many seniors out there who are not well cared for, who need a good place to live. And that demand is growing immensely. So I'm trying to serve that, accomplish something that's good for the world, and make a buck at it.
Yeah. And, operators are always looking for more capital. So if you're able to bring the money,
Yeah, it's amazing how much good sponsors, good operators are out there looking for the money. Without really leaving my desk, I saw just over $1 billion worth of senior living transactions in the last 12 months.
Yeah.
There's lots and lots of interest, lots of demand. And there are many good operators or great operators who aren't necessarily great at raising the capital, so they welcome the help and they come find me. It's great.
Yeah. Well, that's the thing with these larger deals is you have to be an expert in your lane. So like you said, you have an operator who may be an exceptional person at managing a deal, but they don't have the capital raising skills and vice versa.
Yeah, it's especially true in the senior living space because it is a complex business to run.
Yeah.
You get state regulations. You're running effectively a hotel, the cruise ship activities, a restaurant, a real estate business, all in the same place with a set of people who have a real need for the services, and there's a lot of emotion attached with it.
Yeah.
So it's not an easy thing. And so if they can just be good at that, if somebody else can help raise the capital, they welcome that.
Yeah. And I'm always curious, especially with interesting niches like senior living, how did you even get involved in the niche?
So all kind of by accident. I was in the electronic design software business for 25 years, very successful at it, and had a great career there. And a friend of mine called and said, would you go look at the software company with me? Because I'm thinking about, how I can fix it, because a bunch of my former employees work there. And I said, well, what do they do? He said, oh, they do software for assisted living. And I said, what's that?
Yeah.
I had no idea. I didn't understand in 2002. So I went and looked, turned the clock ahead. I became the CEO of that company. We grew it to be the largest software provider for assisted living in the United States. And that's how I learned about the senior living space. And in about 2007, I ran into a sales situation where one of my customers was struggling. They had acquired this senior living community that had been built by a church. It had never made money, and they didn't know what they were going to do. And I was involved in trying to help them understand what they could do to change their operations in the software. And I realized in the middle of that their problem was really a structural thing. That is, the ownership structure. They didn't have the talent to fix it, to manage it. They weren't hiring the right people. They were doing all kinds of things the wrong way. Their intent was wonderful. How do you take care of seniors? But their execution was abysmal. And so it was like, oh, let's put the software in and fix it. But I realized that wasn't going to fix it. It was going to fix part of it. And so the door opened. And then in 2009, I ran across another one of those. And I realized I could make a much bigger difference and make a better living if I would pay attention to the real estate side of this. That is, how did you make sure that these were owned and operated effectively? And very often, I could teach them how to run the operation better. I could give them the tools or the connections, but they didn't have the capital raising skills. They didn't even have the insight about how to structure it properly. So
Yeah.
I didn't set off to do it. I kind of got pulled in that direction.
Yeah, and you bring up a really good point, and as you know very well, it's the people, the team that makes the largest impact on whether it's a good deal, a bad deal, or a great deal.
Yep.
Because if you have an exceptional team, you can really turn things around, whereas a mediocre operation can't.
Very true. Very
Yeah.
true.
And so with yourself, involved in raising the capital, what are some of the things that you're looking for in a deal? Because you see lots of deals come your way.
Yeah.
How do you sort through them?
So step one is I want to qualify the operator. I don't even care about the numbers in the deal.
Yeah.
And I start, and it's no secret, this is a business that's about taking care of people, meaning there has to be a sensitivity about that. There has to be this compassion. And it's not hard to go figure it out. You visit the headquarters, is everybody there people oriented? Do they take time to offer you a cup of coffee, or do they just leave you silently in the lobby by yourself? If you then go visit one of their assisted living communities and you walk in at 7 in the evening, does somebody say hello and ask if they can help you? I mean, this is such a simple thing, but you'd be amazed at how many times there's just not that orientation. It's like, you go to some hotels and they're fairly impersonal because you're not going to get to know anybody. But this is somebody's home. And so that's the first screen is, does the operator have an orientation to taking care of people? Because even if they get all the numbers right, if they don't do that, the business is not going to succeed long term. The second thing I'm looking for is, do they have a small team? It might be 1 or 2 people to begin with, but eventually it's larger, to actually provide the leadership to run the organization. It's amazing how somebody starts off and they do their first one, they get money from their friends and family, they hire a nurse to help, they do a pretty good job. But when they get to having this yearning to go do the second one, they don't think about, well, how do I add staff and what am I going to do to grow my expertise? When they get to 10 properties, they tend to get broken if they haven't thought about that. So I'm looking for organization second. And it depends on where they are in their life cycle. You might find one that's very mature, that's been around for 15 years doing this. And the danger in the organization then is that the senior manager has kind of retired on the job. They're busy taking vacation. They're not there. They're not in the buildings. It's producing reasonable financial results, and the team is sort of carrying on. But there's no attention to detail. There's no yearning to keep doing a great job, and it's difficult. And so you see those organizations begin to fail. So I'm looking for those, and I'm saying, no, I'm not going to invest in those. I put them on my list because when I run into a good operator, I'm going to say, you need to go buy that one, or you need to go buy those.
Mm-hmm.
So that's the second thing. And then I get to the numbers, and the numbers are very much like they are in any other real estate deal. Do the numbers actually support the financial structure that's in place, or does it need to be changed? At that level, it's the same as many of your audience are used to seeing.
Yeah. Yeah, and I think it's great how the first 3 things you mentioned had nothing to do with the numbers, returns, or anything like that. And I find that's very common with people performing at a high level. The numbers are a secondary or tertiary consideration. It's always the people in place first.
Yeah, I would say I turn away and I try and turn away in a very professional way. I say to people, look, here are the things that I see are needed. And I give them very specific ideas how to fix all those things. And they can either ignore me or pay attention. And very often they come back a year later and they fix those things, and I'm happy to help.
Yeah.
But I turn away probably a third of what I see just for those reasons.
Yeah.
There's another third I turn away because the numbers don't work. It's like, no, this is too risky. And one of the things I do when I get a pro forma from somebody is, pro forma is a sort of a static kind of view of, well, this is what we're going to get for room rates, for example. Yeah. None of us know those things. But what we're really good at as people is, look, the room rate will be at least this. It's most likely to be this, and it could actually be as high as this. So I take probably 15 or 20 of those assumptions that are built into pro formas, and I interview the people to get the range, and then I run a Monte Carlo analysis on it. So I actually get a range of what the investor is going to see for their returns. And the interesting side thing that comes out of that is you can see which inputs That is, which factors are actually driving the business from a numbers point of view. And when you show that to people, sometimes it's a little bit surprising because it's not things they thought about.
Yeah.
Very often, there are only 2 or 3 things in a deal that actually drive the results, and they're not the same for every deal. So when you know those, you can share those with the operator, and you can have that discussion. They're much better prepared to manage it, and I'm better prepared to talk to the potential investor on their behalf to say, look, this person's promising you an 18% IRR. Well, let me say it a little differently for you. There's a 10% chance it could be as low as 14%. There's a 10% chance it could be as high as 23%. Now you can make a decision. It's much better to have that sensitivity around it, and it's not about 1 or 2 numbers or a best case, worst case. This is, if all the things go badly, it's only going to get down to a 14%. If all the things go really way up to 23, but he said it was 18, it's actually 19.
Yeah.
It's the likely outcome. And that gives investors a lot of confidence, and actually has made my job a lot easier to raise the money for them.
Oh, absolutely. And actually, speaking of raising money, because most of our viewers and listeners are beginners or intermediates in the real estate space, so that they maybe haven't raised capital before. What has made you successful in raising capital?
Well, I would say, first of all, I'm humble about that because it's all relative. There are lots of deals I haven't been able to get done because I couldn't find it fast enough. But the thing I have found that really makes a difference is to don't go to the investor at all until you have the plan well thought out. And by that, I have a checklist I give to the sponsor. It's a couple pages long. It's like, okay, you got a pro forma. That's nice, but now, what's the operating agreement going to say? What's the management structure going to be? How often you report? What's the actual financial terms you're offering? A really simple thing is when you send the offering memo, do I have to look through 23 pages to find how much money you want? Just tell me on page 1, you're looking for $5.8 million. The return's going to be 18%. The cash yield the first year is going to be. Put it all in one simple table on the front page. That sounds so simple. And I can tell you that makes a huge difference because when you actually take time to talk to the people who have the money, I have a friend of mine here in the Portland area who is an immensely successful investor in lots of businesses. He gets 20 or 30 emails a day with people asking him for money. If you don't really crystallize and compress your story so you can tell it in 2 paragraphs in an intro, and then have a box or a Dropbox with all the data in it, so if they're serious, they don't have to, don't have to exchange mail 3 times and everything else. You just say, here, it's all here. Market studies, competitive analysis that's been done. If it's all there, so they can actually sit down in quiet when they get a rare moment of quiet and read everything or give it to their lawyer or their accountant, get answers. So just that one thing makes a big difference, is get the whole set of documents together, make sure they're consistent. And sometimes that's a 2-week process. Sometimes that's a 3-month process. Mm-hmm. It's worth it to get it right before you ask, because people can then make a decision.
Yeah. Well, it's also about first impressions as well. If an investor has to come back to you always asking questions, the impression is you don't know what you're doing.
Exactly. And you know what? At some level, we all don't know what we're doing about something. I mean, I'm always learning something new. Someone came to me and said, like, I want to do this, but I can't afford it. And I went, well, wait a minute. What are we doing? What are we thinking about here? And it was just a matter of he wasn't aware of other forms of doing this particular project. He'd never heard of a land lease. Mm-hmm. He didn't think that they were safe or made any sense. And I could share with him the names of 4 very large senior living operators who use them all the time. And all of a sudden, it was like, oh, this is actually okay. And it made a massive difference because he then had enough money amongst himself and his few friends to get it done. So I didn't actually raise the money in that case, but I helped him solve the equation.
Oh, for sure. Yeah. And it all comes back to people.
It is. Absolutely does.
People have the knowledge. And so when you first embarked on the capital raising venture for all these other operators, how did you build your investor base? Because that's one of the questions I get all the time. I need to raise capital. Where do I get started?
So I must say, one of the things I did was I just started reading everything I could online, and I quickly discovered that, with the senior living market in particular, there seemed to be a great interest in what I was reading that came out of family offices. Well, I didn't know any family offices. At least I didn't think I did.
Yeah.
Well, it turns out I did. It was somebody I'd known for 20 years. I didn't realize, I thought he was working for a bank. Well, it was called a trust. But when I asked him about it, I said, look, I'm thinking about approaching family offices. Where do I go? So start by asking people you know. And he said, well, Doug, this trust company is a family office for 3 families. We take in $400 million a year, and we have to invest it somewhere. And we have 44 people who do that. Why don't you send me those names?
Yeah.
So I felt really foolish that I'd known this person for years and years, and I didn't even know that's what they did. So I started looking. And then I realized I really needed to understand it better. And so I actually joined something called Family Office Club. It's actually a business.
Yeah. Richard Wilson was a great guest on the show.
And so I did that. And quite frankly, some of it was very productive, some of it was not productive. One of the things that was very productive was Richard put me up in front of an audience of about 450 people as sort of a Shark Tank guinea pig guy. And my job was to pitch raising a fund to 3 placement companies and 3 family offices in front of these people, and then they all gave me feedback. They ate me up. They just spit me out right away. Look, Doug, you don't have any experience running a fund. We're not going to give you any money. You only want $50 million. We don't do anything for less than 300. But the same guy who said that said, but don't be discouraged. I've raised a lot of money for senior living. He stands up in front of this whole group and walks across the stage, reaches his pocket, gets out his pen, takes out a business card. He writes on the back of the business card, hands it to me. He said, that's how much money I want Doug to go invest. Of my money. He said he clearly understands the industry. So even when you fail, sometimes doors open. And I can't say I go all the time. I go once in a while. And I've met a few people that have been productive. A lot of them haven't been productive. But one of the things I learned was, you got to give to get. First, you got to give something back. That's why I wrote the book. I didn't want to write a book. But I sat down and Richard sort of said, look, and several of those people on that panel said, you got to go write a book. You know a lot about this, but people don't tell us. So I did that. That has turned out to be highly productive for people just keep coming to me over and over. This morning, I got an email from a lady I had a phone conversation with about 9 months ago. She's in Hong Kong, and her thing is, Doug, I now have investors with 10 million. Do you have some projects we could put that in? Because of the book?
Yeah.
Now you got to be careful. I almost made a mistake. Somebody approached me out of the UK saying, I've got these investors want to do these things. And he said, by the way, I have a debt source. Well, the debt source turned out to be a complete sham. It was, on the phone, I noticed the phone area code was Nigeria. So, you got to be careful.
Yeah. Yeah. The Nigerian prince with the, billions of dollars. Yeah.
Exactly. It's just one of those things. But so step 1, just ask people Step 2, go to a place where there are lots of people like looking for places to invest or looking for things. And so I made it a point to go to, in my world, there's a conference called the National Investment Center, NIC. Everybody goes to NIC, every CEO. And you go and you participate in things and you talk to people, and pretty soon you come home with a Rolodex of cards of people who want to invest money. And in that case, I met a fund out of New York City that had 500 million in it who said, look, we want to do senior living, but we don't know how to do it. I met an individual who was an operator who was wanting to sell his 30 properties and really he was concerned about the quality of that and didn't know where the money was going to come from. I introduced party A to party B, and pretty soon people are calling me back.
Yeah.
I got an inquiry as a result of one of those meetings out of a real estate firm in New York City that focuses, I got 75 lawyers that do nothing but real estate. They introduced me, they sent an intro about my book out to all their clients. They specifically introduced me to 18 people saying, look, these people might be interesting. For a year, nothing really happened, but then all of a sudden a couple of them did things. So, I show up every morning at my desk about 7:30, and I stick to it until 5 or 6 when I'm out of gas.
Yeah.
And I have a good time doing it.
Yeah.
There's no magic, and I think Richard's advice, He's got a book on capital raising. Go get the book. It's cheap. It's easy. It's got great advice in it.
Yeah, no, absolutely. What would you say is your biggest challenge right now in your business?
The biggest challenge for me is finding enough equity for the deals that I see, in particular in the new construction space. There are many investors who are, smaller investors will put 50 or 100,000 in, who are very concerned about the cash on cash return. And I can show them those projects all the time. I just finished one with somebody where the cash on cash return, the first year is 10.7 and it grows to 16 over 5 years. What's not to like about that? It's great. It's easy to find those people. Now you say to them, well, we need to raise $6 million for a new construction project. We need a guarantor for that loan. Happy to give up a share of the returns to get that. But many people go, oh, it's too risky. It's too dangerous. Well, it actually, there are lots of things that could go wrong. But the fact is, almost all of them get done. And the returns are, I have one right now. It's a new construction project in Tacoma, Washington. And the IRR is 37%. Yeah, you don't get anything for the first 2 years. And you don't get a lot in the third year. But, nevertheless, it has phenomenally solid returns that are going to last for years. It's a brand new building across the street from the University of Washington Tacoma campus. It's a 2-block walk to the train station where you could commute to downtown Seattle. It's a great project, and it's really hard to find people who put up that money for that new construction.
Yeah. And I guess it all goes back to understanding what your investors are looking for and the results they want to get. Yeah. So let's dive into a Keystone Deal. So a deal that made a big impact on you and your business.
This is a sort of a bittersweet story in some ways.
I'll get the violin out, and we can.
Don't complain. I'm getting lots of checks. It's okay, but it's still you don't everything. What you don't know gets you in trouble sometimes, and that's what happened to me here. First, I didn't think of myself in the real estate business in 2009. I was in the software business. I was selling software for assisted living, and I called on this very small property in a small town in Eastern Oregon, population 17,000. The only one in town across the street from the hospital. Absolutely beautiful, gorgeous building. Looked up at the Cascade Mountains. It was like out of a postcard. It was beautiful. And the lady who built it owned all the theaters in Eastern Oregon, Eastern Washington. She made a lot of money. And it was her give back to the community she grew up in. It's called Madras, Oregon. Nobody's ever heard of it, except that baseball player Jacoby Ellsworthy grew up there. And then he went to Oregon State, and then he went to the Boston Red Sox, and New York Yankees. So the only thing anybody knows about Madras. And she built this, and she was succeeding in that there were 72 units. One of the buildings had some damage in it, but she was losing money, $750,000 a year. She said, I want to sell something, but I don't know how to sell it. Well, have you tried? Well, yeah, I called a broker. Well, she called a local broker, didn't know anything about senior living. And needless to say, nothing happened. And I said, so you would like to sell this at a fair price? And she said, yeah, but I don't even, look, we'll get 3 appraisers in here who absolutely know this market. And I'm sure we can find somebody who want to buy it. Well, I went back to some of my friends and we said, well, why don't we buy this? So we bought it for $5.1 million. We had about $1.25 million of equity that we rounded up amongst 12 people. And for the first 2 years, we didn't do very well. We couldn't figure out what we were doing wrong because I knew how to get the staffing right, but the staffing was way out of whack. It took us a while, but we finally fixed it. And it was producing this nice, well, we were writing a dividend check every 6 months to all of our investors, and they were earning 16% a year on their money. We'd promised them an 8% pref. We got caught up on that, and we've been paying 16, 17, 18% for years.
Yeah.
So it sounds like a wonderful success, right? Well, then somebody comes along and says, well, buy it from me for $11 million. And then I learned something that I didn't know. All those investors didn't have the same objectives. Some of them wanted the dividend check, and some of them wanted their cash back. And so nothing happened. So nobody was happy.
Yeah.
So, it's what you don't know that you kind of go, oh. That's why I say it's bittersweet. I get a check. It works like clockwork. It's immensely successful in terms of what it does in the community. It's completely full all the time, and it's making good money. But several investors are not happy because they'd like to take their money and move on, and they can't.
Yep.
I've learned before you take the money from anybody, you better understand what's going on. You better tell them what you're going to do. I made a mistake. But they got me to realize I could make a much better living and have more fun if I'd stop selling software and do the whole thing in investing. And I kind of got pushed that way by a bunch of my friends at one of the conferences. They said, "Oh, let's go have dinner together." I'm thinking, "Oh, good, just a social event. We'll go have fun before the thing starts." Nobody's dressed up. We're at this steak place, and somebody goes ding, ding, ding with the glass. I'm going, "Oh no, the pitch. I didn't come for a pitch." Then they all sort of dig in their pockets, and they all hand me their business cards with numbers on the back, and they say, "We know you know all the operators out there. Go invest our money for us. We don't have time to do this." All of a sudden, I was in the business. And these were people who were CEOs and software companies and operators. There were all kinds of people.
Yeah.
And so I found myself in that, and it's been a great thing for me.
Yeah. I hope you paid for dinner that night.
They wouldn't let me.
Oh, really?
I tried. They wouldn't let me.
Oh,
no. We're cornering you. We're going to take care of you. You're covered. So okay.
Yeah. No, that's great. But and I think that really shows that's almost like the pinnacle of all the work that you had done before that to get to that point, right? Where they trusted you with their money.
Yeah, it was a real surprise. It was a really pleasant surprise, and it made me stop and say, "Okay, it's time. I need to go do this."
Yeah. No, I absolutely. So how has getting into real estate changed your life?
A couple things. The first is I have way more control of my individual life. If I want to go skiing on a Tuesday morning, I go skiing. It's just that's the first thing. And having been the CEO of a couple companies and VP of worldwide sales for a high-tech company, and you have no control of your life at all. I mean, you're part of the company, and that's what you got to do 24/7. So I have more control of my personal life. Second thing is, I find I now have time to allocate to doing things I really believe in. I think one of the biggest problems in the senior living space is it's a relatively immature market compared to many others. It's not as sophisticated as the hotel business or the multifamily business. Yeah. So you need new leaders. And the problem is a good problem in that there's a huge amount of opportunity coming. If we look at the world today, there are 22 million people in the United States over 75. And that's going to grow over the next 10 years to 35 million people. So they need services, and they need management who understands how to provide those services. So, I helped build, because of my software background, a business game on running an assisted living community, one on running a skilled nursing community, and I go out and do that. I don't really get paid for that. I mean, I put my time in, and they cover expenses, but I do it because it's my give back. And I have time to sit on the board for the veterans homes here in Oregon, to be on the finance committee to help make sure that this thing stay under control. It's an emotionally tough job, but it's a really rewarding job. So I have time now to do the things that are really important to me. It's not about making money. It's about doing what's giving back, and I enjoy that. And it pays the bills. I mean, it's one thing when you go to somebody and say, "Look, I'll raise the money, and I want a finder's fee," and people are used to hearing 3 or 4 or 5%, and I say, "Look, I 5% at closing, but I really want 5% of the promote." "Oh no, I can't do it." Well, that's their first. "Oh, I can't do that." Well, okay, fine. Go find your money at 4 or 5% from somebody else. Yeah. They don't usually do that. They usually say, "Well, show me what that means," and I show them that over the course of 5 years, I'm really asking for like 2 or 3% of the profit on the project. And when they see it that way, they go, "Oh, that's fair. Okay, fine." And those are big numbers.
Yeah.
Those are the numbers that make a difference here. So.
Yeah. And for them, without the capital, there is no deal.
Well, they realize after a while that I do more than bring the capital, because I'm the guy who asks the questions to say, in the multifamily space, if you look at a website, there's a phone number, and if you call the number, there's somebody answers it 24/7, and they answer from the building. Well, they don't. It's a call center. It's a specially trained one. They don't know that it's even available in the senior living space. It's very unusual. It's very inexpensive, makes a huge financial difference, and they don't know about it. So I'm the guy who asks them when I do my audit with them early on about this being an operator. I give them feedback on every single thing they're not doing they could do, and they begin to realize they can call me anytime, and I'll help them find somebody who will solve whatever the problem is if I don't know what it is right away.
No, and it's so valuable to have that extra set of eyeballs on a deal, because you'll be catching things that they might not catch, and vice versa. Yeah. That's great. Well, if somebody's looking to get in touch with you, learn more about what you're doing, where can they find you?
So the easiest place is to go to my website, 14plus. You just spell out the two words, 14plus.com. And, it's a funny name, I know. And people go, well, where'd that come from? Well, there's a thing some of your investors may know about, listeners, the national, NCREIF, that are all the, how do you get the data to know how industrial compares to retail, compares to senior housing, who's going to do that and be good about it? Well, there's this real estate investment fiduciary organization that does it. And what they've shown is for the last 15 years, 10 years, 3-year time frame, the real estate asset class with the best returns is senior housing. And people don't know that. And for many, many years, that average is about 14%. It's actually recently dropped to 11.2, but it's still 4 to 6 points better than anything else for the most part. Now, the last year, industrial has been better, warehousing, but those short-term things come along. This industry is different. People don't move to assisted living because they want to. They need to. And so when the economy goes to pieces, they don't move out. They still need help. So it's kind of recession-proof in many ways. And because it produces a higher return that's recession-proof, it's a great asset class to be in.
Oh, absolutely. And actually,
the funny name, it's to say, look, if you want to do better than average, you call me.
Yeah. As long as people don't think it's like a plus-size clothing company.
I don't have that problem. Nobody.
No. Oh, that's great. Well, Doug, just want to say thanks so much for taking the time today and sharing that. I found this very, very informative. So thank you very much.
Well, thank you for the opportunity. My best wishes.
Yeah, it was my pleasure. And to you, our viewers, I wish you well on your journey from purchase to profits. See you next time.